Hey everybody, welcome back to Macro Micro Moment with Nancy Tengler and her trusty sidekick, Arthur Laffer. Busy day.
Huh?
Busy. We had the Nvidia kind of like that closing out the day, and everybody's watching with bated breath as to Nvidia, which we're going to talk about today. Or should I say,
it was a good report, I think. I don't know what the problem is with Wall Street, but they beat on revenues, they beat on earnings. They guided a little bit light because they're not including anything for China. So that is just what I would call conservative, good old-fashioned conservative guidance. The data center was a teensy bit light. Gross margins were good. They're describing extraordinary demand for Blackwell. And that's what we're learning from all the earnings reports, that it's not that the hyperscalers are having problems getting supply. And so that's really the problem. And Nvidia is the major supplier. Now, the naysayers are saying, well, Apple and Microsoft are building their own chips. That may be true, but at the margin, Nvidia is still driving the train for the next couple of years. So, I mean, we trimmed our holdings, Arthur, in the middle of August because the stock had a really big run, and it was at levels kind of about where we closed today. So the stock's down after the close, but it's not down a ton. So I think this is when you stay with, and we're pretty happy with what they've said so far in the written releases, but the call's going on right now, so stay tuned. And it looks like the stock's come back a little bit, so that's good.
You think it's just a quick case of like expectations being too far out of line? People don't hear all this exuberance in the call or the numbers, and so they kind of back off the trade. It gets hit a little bit, but it's not like a rout, like something's really wrong with the company.
Yeah, and I was just looking at some of the headlines, like Nvidia gives lukewarm forecast, stoking fears of AI slowdown. That is not what they did. And so, if they've done that, the stock would be down 20%. So I think, stay tuned. We were buying it last year in July and August at $88 a share.
Yeah.
So, at 180, I'm pretty happy. And that's, I hope our clients are, but that is what you have to do. It doesn't go straight up forever, even though I know you're a Palantir shareholder. So your experience has actually been that it goes straight up, but there are pullbacks, and we actually bought it when we trimmed the Nvidia, we bought some Palantir at like 140 a share. Mm-hmm. And I think the thing's back up. You probably know exactly where it is.
No, I don't. I trust you. I give my money to you, Nancy.
It's back. Yeah, it's back up to 156. It sold off today, but that's on all this dopey news that we're going to talk about at the end, with the administration saying, "Hey, let's take positions in all these companies." But we'll come back to that.
That's also. Look, we're professional money managers. One of the things that's really important to remember is how you build portfolios. People all the time buy a single stock and sit on it. And if you're right, hey, congratulations. But I know this, I'm preaching to you, preaching to the choir, but I'm talking to everybody who's watching us. It's the importance of building a portfolio. You don't get every name right all the time. You build a portfolio of names, and you manage them, and you pare stuff back. You take some of your profits off the table, you reinvest it in names you like. That's what an active money manager does.
Yes.
It's so important to own not one name, so that if it did have a big earnings miss, you're not going, oh God, I got to get out really fast.
Right. No, you're absolutely right, and I think that's shown up in our total return relative to the market. So, thank you for the reminder. But so that's it. CrowdStrike reported as well. They had a great report. It was a beat, and raise. So that's what we call a triple play, and the stock's off 7% because they're making an acquisition. It's the algos that drive the market in the after hours. So we'll see how they do tomorrow.
And we're just about to round out the last month of the quarter, which is also the witching hour, because that's the end of the government's fiscal year end. So I don't know if people remember this, because I know that this is the fun stuff that people should think about. But September is the end of the U.S. government's fiscal year end. It's not a December 31st. It's actually a September 30th. So bond market, we're going to talk about the Fed and Lisa Cook and Powell and some of the stuff going on there too in a minute. But get the fiscal year end coming up as well, and that usually causes a little bit of instability as the Treasury's trying to refinance everything before the end of the year.
Oh, fun. Yeah. Well, so we'll talk about that, but let's go around the world with Arthur.
With me, woohoo! Yeah, I just keep thinking that's you telling Taylor to launch me into space, but as opposed to around the world, it should be me riding a camel, I think, or maybe 40 days and 40 nights in the balloon. So
around your face.
I was going to bring up 3 items today, but one of them kind of went away, at least for the time being. But there's 2 kind of, I think, significant events that are going on. One's in Europe, one's in Southeast Asia. In Europe, it's pretty interesting. It's what's going on in France. It's kind of this like long drawn out like melodrama of the end of the Macron administration. Really is what we're watching. We're watching the slow political unwinding of Macron's coalition. He rode in on the big white horse, as a savior for France. He tried to get all this legislation passed early days. He got a bunch of it done, and then things started to stall out. And what you're seeing happen right now is, I kind of think really the swan song for Macron. This is like,
really?
Yeah, he's got nowhere to go. I think that really is his political career, at least as it stands right now, is over. He's clinging to the edge of the cliff and he's trying to pull himself back up, but he's done.
Then he's going to have to go home. He didn't want to do that. She'll
but he's done. I don't see how he gets out of this. And I put some bullet points on the left-hand side here. So right now this is the 4th caretaker government. So the Macron is the president. The prime minister is the one that puts together all the packages, kind of like a speaker that in the House, but a little bit different. So the prime minister right now is this Prime Minister Bayrou, and he's put together this package because they're trying to get a budget passed. And so he's got this budget put together, and he's called for a vote on September 8th. And it's like $44 to $50 billion in basic cuts, spending freezes, and tax increases. France's budget deficit is getting pretty big. It's about 5.8% of GDP. And so they've got to do something. They're 113% of debt to GDP. But this vote, by the way, looks like it's dead on arrival. Like all 3 of the major parties, with the exception of Macron's, which is not a major party anymore, they're basically saying this is a non-starter. Expected vote failure. And so there's really 2 outcomes, Nancy, of this whole process. The first is, the government fails, the budget doesn't pass, and then Macron has to go and find another prime minister to try to negotiate some kind of budget deal. Okay. The other one is he can call a snap election, which only he can do. Otherwise, we have to wait till next year for the next election to come up. If he calls a snap election, it has to happen within 20 to 40 days. And there's typically 2 rounds, depending on who wins and how many votes you get. So it's interesting, but if he calls a snap election, I think it's a foregone conclusion that his party would not be anywhere near the top 2.
So the prime minister, he acts like kind of our Speaker of the House. He's pushing the legislation through, and
yeah, he negotiates with all the parties, tries to put together a budget, tries to get everybody to agree. He goes and negotiates with the majority parties if he has to, and right now he has to, but there's no coalition that has enough votes to get anything passed. So you have to kind of, every time you want to do something, you have to negotiate. Now, the only other option, which is Macron's done a couple times now, is they can override and basically force through the budget. He can force through a budget through this process. It's like a reconciliation process, but he can just push it through. The problem is, if this budget gets passed by Macron, you're going to see strikes. You're going to see protests in the street, and every one of the other parties is going to do it.
And I went to Europe after college. This stuff has been going on for 56. I mean, that's not when I was in college, but it was going on before. It's unbelievable the way I don't know how they operate, but it kind of goes back to what we've been talking about, which is amongst ourselves, but which is American exceptionalism is still alive and well. And foreign flows, as goofy as we may be, foreign flows are at historic highs. So they're buying our bonds, they're buying our stocks because it's the best dysfunctional house on the block, right?
Yeah, I mean, and look at France.
US,
I mean,
that is.
their unemployment rate is 7.5%, Nancy. So people here are freaking out about 4.1 to 4.2, and like, oh my God, is labor softening? Are we going to have a stagflation or recession? France is at 7.5, and that's pretty good. Their inflation's pretty low, but their GDP, I think, was annualized at like 0.7 or 0.3. I can't remember which one. Germany and France, and they're both really anemic. So no growth, unemployment's picking up, inflation's under control, but the economies are just crummy. They're just not performing very well.
Yeah. Well, so overregulation, right?
Way overregulated.
Yeah.
And also no clear political mandate.
Yeah, and there's no innovation, is there, Arthur? I would say.
No, that comes down to regulation too. So you got regulation, you've got really inflexible labor force, high regulation, high taxes. Yeah.
That's 6 weeks of vacation. I remember when I worked for UBS, not only did they get a ton of vacation, but they had 2 weeks a year for military service. And I was like, wait, weren't you people neutral? Like what? You're just going, sitting around a campfire and whittling with your Swiss Army knife, methinks. But anyway.
By the way, I didn't tell you that was actually one of he's trying to eliminate 2 holidays. They have so many holidays in France. So part of that package to save money was to eliminate 2, which is a deal killer for France.
Well, let's go to India.
Let's go to India. I got another like really funny. I think everything I do is funny, but some funny.
I know.
Yeah. So this is India, Russia, US. Who's your daddy? So this is the conundrum India is going through right now. Is we had the war breakout, the invasion of Ukraine by Russia, and the European Union and the US and a bunch of allies put all of these imposed restrictions on Russia and trade and embargoes, and they put caps on the oil and stuff. So India's didn't buy a lot of oil from Russia, but now it buys about more than a third of all crude in Russia. And it's not just oil, it's gas, chemicals and stuff comes from Russia now. And so India has basically been able to save about almost $4 billion just in the last 12 months on the price they're paying Russia versus what they would pay if they had to go buy it in the open market from like the Saudis or us.
Jiminy Christmas.
Yeah, so it's a big number. And so India is the 3rd largest consumer of oil in the world. So it's not a trivial issue. But here's where the rub comes in. So Prime Minister Modi's been buying this, and we've been letting him do it. But now Trump's trying to get the deal closed in Ukraine, and India's buying the oil is helping fund Russia's war machine. So I believe what the president really is upset about is that issue, because he wants to get pressure on Putin to end the war.
Right.
And so what he's done is he's now just today imposed an additional 25% tariff on India. Okay. So now India's tariffs are higher than China's. Okay. And what Prime Minister Modi actually did, this is a good thing, he should have done this without having to have pressure on the U.S., but he's cutting the goods and services tax, like a national sales tax, okay? And right now it has 4 rates, 5, 12, 18, and 28, and they're going to move to a 5 and 18. So it's a pretty big cut, which is good. Should have done it without pressure from us.
That's awesome.
And then
one of those like early morning, I should be getting up, but I'm going to watch, Bloomberg on my cell phone in bed. And this guy comes out and he's holding up a bag of shrimp. And he said, I don't know where I'm going to get my shrimp because of these tariffs with India. And I was like, wow, I thought they came from, I don't know. Where did you think shrimp came from?
I thought they came from Vietnam, actually, or something like that.
Yeah, majority of the shrimp in the U.S. comes from India, at least.
Isn't it like some crazy number, like 70% or 80%? It's not like 30. It's a big number.
Yeah. So I don't know where you get fresh shrimp from, but
it's not coming from Bubba Gump. It's not coming from the Gulf of Mexico, like Forrest Gump.
Well, what do you make of? I've got opinions on this, of course, but what do you make of the Intel news? So recapping for the viewers real quick, the Congress passed the CHIPS Act last administration. It was 200 and something billion. Intel got about between 9 and 11 billion. I can't really get a firm number. And that money has been pledged to them. And then the president went back and said, I want equity for that, and I want warrants. So he got 9.9% of the company, diluting existing shareholders, and then warrants if they don't perform. But they're not going to, they're not bringing customers allegedly, and they're not going to have anything to say about the running of the business. But this was just a week after he declared that the CEO should be fired because he had ties to communist China. So walk me through this and what you think of this business of taking stakes in companies, because now they're saying they're going to take stakes in, this was Howard Lutnick, of course, but take stakes in defense companies, Boeing, Palantir, you're holding. So do tell. Well, I hold it too. So do our clients. But.
Horrible idea. I mean, this is horrible. This is what the Europeans did. Everybody else has done this. State-owned businesses don't perform well because the incentives are really messed up. They're totally screwy. So the first question I have, you own 10% of the company. Does that mean the government gets to vote proxies and elect board of directors and have that much direct impact on the company? How do you handle that? It's like this crazy idea of a sovereign wealth fund. I mean, why do I want government involving itself actively in the ownership of publicly traded stocks or private companies? It's bad. I mean, they can't run the post office or the DMV. You think you really want them running your bank or your tech companies? I mean, we just got over this with COVID, where the government came in and used its 800-pound weight to push companies around without owning the shares. Now imagine they actually have the economic interest, and it's an administration that's not friendly.
That's my point.
Horrible idea. Horrible.
I couldn't agree more. Well, it is actually. So, you've got the golden share that the Trump administration demanded for U.S. Steel. So they actually have involvement in the day-to-day management of the company. Then you got the export tax, which is the 15% that AMD and Nvidia have to pay the government to sell chips to China. It's unconstitutional. I don't know that anybody's going to object. I mean, certainly Nvidia and AMD aren't going to, because before that they were prohibited from selling. So but somebody's going to sue the administration, and then it's going to work its way through the courts. But in the meantime, they're going to be paying it. And now you have this ownership. And I went back and looked at Chrysler, because that's one we all kind of remember. And it was Jimmy Carter, 1979, 1.5 billion, which was a lot of money back then, bailout. And then you got Lee Iacocca, and remember what he was everywhere. He wrote books. He was on talk shows. He was the king of turnarounds. And then in 2008, 2009, the company declared bankruptcy and had to get another bailout to the tune of like 12.5 billion. And now it doesn't exist. And so I think that's really as far as you have to look. You could go back to Obama and Solyndra, picking solar companies, and that thing went bankrupt, and the government invested money. And I think what I find particularly egregious is that it's our money. So, so the taxpayer dollars are what were granted to Intel, and now the government's taking ownership. Okay, am I going to get a rebate check? Because I didn't see anything from Chrysler.
The other thing I worry about, Nancy, is that the issue of Chrysler. Like, once they start to go under and they make a bad decision, you got to bail them out because you own part of the business, and it kind of violates one of the prime tenets of capitalism, which is, hey, if you're a company and you run it poorly and it goes into the ground, we have this thing called bankruptcy. And that's how you kind of unwind crummy businesses or businesses that make big mistakes and it costs them the business. We can name all sorts of people that have done this. I mean, Chrysler, but when the government has skin in the game, all of a sudden it becomes basically a state enterprise or a quasi-state enterprise. Will they bail out, and will the company make good decisions or bad decisions based on the fact that it thinks it can get bailed out? I mean, look at the U.S. Post Office. Look at Amtrak. I mean, how much money do we have to throw into these kind of, they're quasi-government, but they're not. They don't have shareholders, but they're just black pits, holes of money.
Well, it's so funny you say that too, and Fannie and Freddie, because you brought that up to me.
Yeah, that's right.
Yeah.
It took them, defrauded the shareholders.
I remember. What's that?
I said they ripped off the bondholders and the equity holders in those two.
Yeah. So I don't know. I think it's a colossally bad idea as well. It's not going away because we've got these deal maker egos that think they can make everything better. But
Yeah.
I don't know. It's going to be really interesting to see how this ends up. Um, and Intel has been colossally poorly managed.
Yeah.
So the stock I think has returned over the last 10 years negative 10%, and the market's up hundreds of percents. So
Boeing.
anyway, yeah. Well, that's another one they want to take ownership in. Yeah.
Sure.
Yeah. So anyway,
Bad precedent.
all right. So the subject, the she who shall not be named, Lisa Cook. What do you think about that?
I think it's interesting that this issue hasn't popped up before now, to be very honest with you. I guess my opinion is that the Fed should be looking into it independent of anybody else. And I think the fear is it sets a dangerous precedent to have someone at this senior level with these kind of academic credentials being accused of this. It should be pretty straightforward how to find out. They should recuse themselves at least until a cursory examination by I'd say at least by the Fed, but the DOJ, if that's what it is. If she's committed fraud, that's a big deal. She should go. But I mean, we had that stock trading issue, didn't we, Nancy, just a couple of years ago? And
under Powell.
guys said, "Hey, this is horrible. We're going to, rather than drag the Fed into this, we're going to get out of here."
Yeah. And so they resigned.
On both sides, by the way. I don't like the president's doing either. I think making it personal is not the way to do it either. I think you do adjudicate it, but you got to do it the right way.
Well, it's funny because the Federal Reserve came out yesterday and said, made a statement, and it was, basically saying she can only be removed for cause. Long tenures and removal protections for governors serve as a vital safeguard. But you've made the point, if you're in a situation where your ethics really can't be challenged, you've got to be above board and then some. And again, we don't know if she did it. I kind of think Bill Pulte wouldn't have gone, on the air and said, we've got it. It's within 2 weeks. She applied for 2 mortgages. Both of them were declared as her primary residence. That's a federal crime. And you've pointed out, what's that?
It's fraud.
It's fraud. And you've pointed out that it's probably pretty broad based. Yeah. I mean, we know Adam Schiff has gotten caught up in this. A lot of these folks do this. The thing is, if I was going to sell my soul, I don't think I'd do it for, a lower down payment and 0.5% off my interest rate. I mean, it would have to be for something much bigger than that. But that just shows you how deep the corruption goes and how unchecked these folks are. As you know, I applied. I was asked to interview, use that term loosely, for a Federal Reserve position. Called your dad and he said, "Don't do it." So I did it. And it was a lot of fun because I got to go to the White House. But that's the first thing they ask you. Do you have anything to hide? Is there anything about your record we need to know about? So, yeah, they vetted, but it's government. So the vetting may have not been accurate. But yeah, you're right. I think this is pretty serious. I think the president has done himself a disservice by attacking Powell in such a vicious manner, even though, I've been criticizing Powell for 4 years pretty mercilessly. I think my favorite was the savant idiot in the White House. That's a Joseph Epstein. I'm not in the White House, pardon me, at the Fed. That's a Joseph Epstein phrase, and it's the person who's very smart but is 100% wrong about everything all the time. That's Powell. But anyway.
But your point earlier, like these people, they are very sophisticated. It's like why board of directors are held liable for bad actions. It's, your expectation is that you should be held to a higher standard because you can't get fired for just regular stuff. And I would say financial fraud, I think that would meet my definition of cause. Now, she hasn't been convicted of that, which I think is what Powell was talking about. He's like, "Hey, we got to let this work out. I just can't fire her because someone said she did something." But he should have an independent investigation because it definitely affects the reputation of the whole Fed. To have people like this that are, if this is true, then what's going on with the vetting process? How did this happen? And I think you and I were talking, Nancy, and I said, that I wouldn't be surprised if there is a lot of analysis right now going on for this specific type of activity because of the Senate.
Across
Oh yeah,
agencies
you
in
know this is
Congress.
probably a much more widespread issue that people were doing this a lot. And this is chump change in the scheme of things, at least individually. You're right. I mean, what did she save? Like a point?
Yeah, maybe.
I
Well, and
mean,
my favorite part of all of this, I was watching, of course, again, early in the morning, and they brought in the host of Jackson Hole, who's the Fed president of Kansas City, and they asked him about it. He goes, I think we should be fair. These applications are very complicated. He said that on the air. Now you got a PhD economist who's setting monetary policy, which, by the way, affects mortgage rates. And the application was just a little bit too complicated.
you can't make this stuff. I mean, I wish I wish we were, like this is what is it, the B? It's one of those joke, parodies. It's not. So like a regular person can fill the form out, but to your point, but PhDs that are entrusted with running the entire monetary policy of the largest economy in the world,
Right.
maybe not. It's really hard, to get that next line. And what is a primary residence? What do you mean by primary?
Who's first? What does first mean? Yeah. Anyway, so we'll see. I don't. The market doesn't seem to care. Bond market maybe a little more jittery, but not really. And I think Byron's done a good job for us, kept us nice and short, callables on the bond side. So we'll see. And then of course our bet. You owe me $100.
Not yet.
Because the Fed's going to cut.
Until the fat lady sings.
Anything else you want to add?
I want to talk a little bit more about the Fed in general and interest rates. So what I find interesting is the president and some of his rhetoric has been, I think, a little bit extreme in some cases. But more importantly, we got a Fed chairman whose term ends in May, and May's coming up a lot faster than people probably are really focusing on. We haven't had anybody named yet as a potential replacement for the Fed Powell, but you have a lot of instability, not just with the chairmanship, but now with governors. It looks like some voting members, bond markets, unlike equity markets, don't tend to like volatility and they don't like uncertainty. And I don't care if we were talking about unknown Paul Volcker right now for replacing Powell, and Volcker was great. Alan Greenspan actually, I think, overall did a really good job as well. But the transition periods with new Federal Reserve chairmen are always fraught with volatility. Yeah. So what I would expect is bond volatility, interest rate volatility to start picking up. We've already seen the yield curve, even with talks of a cut coming, the yield curve is getting steeper. Long rates actually backed up. They didn't go down. So you're
what does that mean?
Well, that means that basically the short end, the short maturity part of the yield curve is coming down in expectation of Fed cuts coming up. And it vacillates up and down based on how many they think they're going to get the next, say, 6 to 12 months. But that means the longer end of the curve, like the 10-year and the 30-year, are actually have not been coming down. They've actually been moving up a little bit, even when the short end of the curve, the short maturities actually are coming down. So what's happening is the spread between the short and the long is getting wider, and the curve's getting steeper.
Yeah. And so what's weird though is mortgage rates have come in a little bit, right?
They've been rising. Now they've been rising this week.
Oh, they did. Okay. See, I don't pay attention.
They were down, and now they're moving.
I don't have a mortgage.
They moved up. I mean, we're not talking about like 20 basis. We're talking, but they came down initially when Jackson Hole, and then they started moving back up with the 10-year because they're going to follow the 10-year.
Yeah, well, it's going to be really interesting because, and do you think we'll ever know why Governor Kugler just took herself out, resigned? She was a Biden appointee, and that's what brought us Stephen Myron. I know. I wonder if there's something.
But how many houses she owns? How many condos she has? How many rental properties that are primary residences? I would not be surprised if that starts to happen. I think this is a much more widespread problem.
Isn't it great to laugh at other people's misfortune instead of our own?
Don't look at me. Look at him. Oh my God, this guy's way worse than me.
I'm not laughing at anyone. I wasn't brought up that way. I'm
Yeah.
very sorry for all of
I
that
only have,
trouble.
just for the record, I have one mortgage.
Okay, go.
No,
You have
that's
what?
it.
Oh,
I have
one mortgage. Listen, you live long enough and you'll not have a mortgage too. Now, a margin account is another issue, but I'm working on that. So,
Yeah.
all right. Well, it's great seeing you. You're coming out to Scottsdale next week?
Yeah. Yep.
Yeah, I'll be there.
Come out for a meeting. Yep.
I'm coming back into the oven. So this is my
you're coming back,
goodbye
right?
Tahoe outfit. Yeah, I'll be there. I'll see you there. Okay. Thank
All right,
you.
everybody. Well, thank you. Thanks for
Bye.
joining us again on Macro Micro Moment on Hump Day.
All right. See you around. Okay.